I don't think of what are good stocks to buy. And I don't see it as my job to do that. But what you have to look at is what you're looking for is quality there. And just going back and, a few weeks ago, I was saying, the stock market capitalization of U.S. stock markets is $33 trillion. Well, now it's back to $30 trillion. And less than 1,000 companies make up 97% of market cap. So let's take half of market cap is $15 trillion. And less than 100 companies make up 50% of market cap. And I'm going to stop right there. And I can tell you there's just a few companies that make up a third of that. So what I get to is we're drawing from a small pool globally. And you have central banks in Japan, Sweden, and other countries, and maybe ours too, buying the stock market. Ours just doesn't furnish that information. I could see why. They want secrecy. And so we're all picking from a small pool. So what you're wanting to do is go look at what's in that pool if you're trying to break it down. And then are you going to get, you'd say, well, great quality is Boeing. Well, not so much so because of their production problems and the MAX jet. They've got a lot of planes parked they can't sell, so they're sorting through that. All right, you'd probably say, well, Apple, super quality. Well, where's all their stuff made? In China. So you could say, well, gosh, they're a really great company, but and they're discounted from their high. But is their problems ending yet? I don't know. So what would I rather do? And I'll go back to, the past 90 years. Most stocks don't outperform 30-day treasuries. So what's going to be the momentum stocks? I would rather diversify instead of plow my money into a few companies, maybe get it right. But the problem is, what if you get it wrong? And if you're buying right now, whenever you buy stocks at whatever point, it's going down at some point. Do not go buying stocks, whether it's in the mutual funds, ETFs, exchange traded funds, or go buy individual stocks and God, it's at its bottom, it's just going up. It can go down more. Go back and look at charts of 2000 from fall of 2007 through April of 2009 and tell me where's a good buying point prior to April to buy into it at. You have to understand it's likely to go down at some point. So what is your tolerance for the going down? Because as it continues down, are you going to change your mind and bail? And that's a mistake because we also know, we gave you some long-term numbers here. Since 1926, 84% of the 3-year periods, rolling 3-year periods for the S&P 500 have produced a positive return. The S&P 500 has been up 40 of the last 50 years. 1970 to 2019, gaining an average of 10.6% per year. The stock index has produced an average annual return of 18.1% during the 40 up years, while losing an average of 14.8% during the down years. If you have time on your side and you're not needing to take income from assets, you have to think about this. But you have to invest, once again, knowing this is going to go down. And the problem for those taking income is negative years can be devastating to portfolios, and the portfolio may never recover. I don't think anybody should invest 100% of their money in stocks. You're overweighted, and you better have a high tolerance for money moving negative at times. You should be blended.
Now, I have the benefit of sitting across from you most shows. That sounds almost exactly what you say when people ask about buying stocks when we're at a record top, when we've just had a big run up and we're breaking. 2 weeks ago, people were asking,
what do you buy?
Yeah, what are you buying?
I want in.
Yeah, exactly.
Yeah.
I want
now
in.
they're suffering, those that were buying at that point. And, you know, I'm not going, I can't give you an answer. I don't want to give you an answer. What do you go and buy? You know, that's the assumption that you've also hit bottoms. And once again, I would rather buy through an ETF. And I would rather be blending, but I don't want all of my money in stocks because I know it's going to go down. And I'm not trying to find that Apple at $2 a share and hold it till it gets to 300. Nobody's holding something that moves that long. And look at the gyrations in there during this period, just like what we've talked about on the historicals on the markets here today. But let me give you a little bit different number perspective here. The split between up and down trading days for the S&P 500 over the last 50 years is 53% up, 47% down. The split during calendar year 2019, there were 252 trading days last year, was 60-40, up versus down. Time in the market. Since 1950, the S&P 500 index has been up 54% of the 17,613 trading days, 60% of 840 months, 66% of 280 quarters, and 73% of the past 70 years. It's mostly up. Okay, but these negative times do come, and you need, if you've been properly blended, you should not have any qualms with what happened this week.